Hey listeners, it's Paul Andriola here. Why not join our community at Small Cap Discoveries, where we offer our members direct access to some of the best microcap investment opportunities available. Our members are getting access to premium microcap financings, research reports, and direct access to management. Sign up today at www.smallcapdiscoveries.com.
Hi, everyone. Welcome to the Small Cap Discoveries conference call. Today on our call, we have CEO Hadi Abassi from Atlas Engineered Products. Atlas trades on the TSX Venture Exchange under the symbol AEP and on the OTC under APEUF. The company is trading at 43 cents with roughly 58 million shares outstanding, or about a $25 million market cap. I'd now like to hand it over to Paul Andriola.
Hey, great. Thanks, Trevor. I'm ecstatic to have Hadi here. From Atlas Engineered Products. Full disclosure, I've got to mention that I'm a director of Atlas and also a significant shareholder. So now that that's out of the way, Atlas just reported Q2 numbers, and we've got Hadi here as well as Melissa, the CFO, Melissa McRae, to talk about the numbers and talk about the business, talk about everything we can related to Atlas and the industry. So Hadi, great to have you here. Congratulations. I'll congratulate you as a shareholder. But before we get into the numbers or everything, why don't you tell us exactly what Atlas Engineered Products does?
Well, thank you, Paul, and thanks for everybody for being on this call and giving me the opportunity to share our story and our dream with everybody. And I'm sure lots of you have heard it before, but I'm honored to share it with you again. And really what Atlas does, or what we started to do, was we had a company under Nanaimo, and then we manufacture roof trusses and engineer wood products. And then we decided about 4 years ago to do the roll-up strategy and go across the country. And then our business is like the similar story to Boyd Auto Body. We have a lot of fragmented businesses around the country and across North America. They all owned by individual owners like me, and there was an opportunity for a roll-up strategy with all those companies and giving an exit strategy to some of the owners that they don't have the kid take over and stuff there. And that's what that was the dream, and that's what we started, and that's what we keep on doing. And since we've been doing that, then obviously you learn different things and different opportunities come across. So it's not just about roll-ups and M&As anymore. It's about adding new product, new opportunities, new automations and everything. So you start with this, really, I shouldn't call it a small possibility. You do start with this a small possibility. And after these 4 years now, the whole world's opened up, and it's the same ball game, but it's a new ball game. And we have a lot of opportunities ahead of us. But before we do that, like you said, we had to build the foundation, work on the foundation, and make it stronger than it was before, because we were not producing the results before, and start proving to the market and proving to ourselves that we can actually run companies and make money and make them efficient before we start building on that. And that's what we've been doing in the last 2 quarters, working on the foundation and building a solid foundation. We are not there yet, but we're working every day towards it.
Fantastic. Hadi, before we get into a little bit more about sort of what you and the team have done sort of since you came on board, I do want to get back to what you mentioned as far as the M&A and the opportunities to consolidate a very fragmented industry. One of the things that appealed to me when I first heard about Atlas was the similarities to a Boyd Auto Body or companies like Laidlaw, or there's been a number of companies, even in sort of in waste management. This is an old school, roll up the sleeve, very hardworking type of business where a lot of people have to get out there and get your hands dirty when you make trusses or any of these sort of products. So what I noticed is a lot of companies like Atlas that were scattered across the country where, mom and pops had built up these businesses, generated good incomes for themselves. But then when it came time to sell, when it came time to retire, there wasn't really a market for a lot of these companies, and it was they were going relatively cheap because it was hard to find a buyer. And the kids that grew up in the industry, they sort of, the parents made enough money to send them out to law school or become doctors or engineers or whatever. So there was a number of companies that were just available for sale. So tell me, give us a better landscape of what that looks like now. How many companies are really potentially out there to acquire, and what are the issues with these companies? Because a lot of them, you know, as these companies sort of are put up for sale, they don't necessarily go out and automate or buy the latest equipment. They're not necessarily run very efficiently. So what are the opportunities in terms of the number and what you look for when you buy one of these companies?
Well, the opportunity in terms of total trust plans across the country or North America, we're talking about thousands, and we're talking about a multi-billion-dollar industry we have. And what we had when we had the game plan was we wanted to be in different locations, and we started back east first from Ontario, because that's where, for the Canadian market, that's where the most of the business happens and the population and stuff. That we wanted to start there and move back west. And there is was the distance and the strategy of the placement of how many kilometers away each factories are for managing them in a better way and stuff there. So that's what we looked at. And we do the same thing there, like even cross the border. We look at, we're going to move, eventually we're going to move to the US, and we got to go and start looking at the factories down the US too there. But now, the prices are good, but since we come on board and then we buy the company stuff, of course everybody sees what we are doing, so the prices goes up a little bit. Plus, you can have all the game plan and all the strategies in the world, then something like COVID comes along and just throws everything out of the window. And I have never been, in my 35 years business, I've never seen anything like this. We've never been through a pandemic, so we have to deal with that. And then every decision you got to make, you got to deal with that in terms of M&A. What is the COVID and what effect the COVID had on the pricing and all of that stuff we're looking at. Then now we added another flavors come to it, is the labor shortage in the industry. And basically everywhere we have labor shortage. So now it's not just a case of looking at buying companies anymore. It's looking at the company, what do they do? What is their location? What kind of automation they have? And what kind of manpower they have? And is it better or easier to go buy the automation, fully automated plant and start something from new and everything? And that's what I said. So all of a sudden, a simple fact of the first 2 years was we just knock on people's door, and then so few people interested, you go buy them. I know this become a whole pile of questions and whole pile of due diligence arises from it, that you need to start making the right decision at the right moment on it. But in terms of opportunities for M&As and roll-ups, the strategy and stuff, there really is there are lots of opportunities available that you built your list and who you're going to deal with. And there's always one jumps on top first, and then you think you have this one first, then you become number 5 on the list 2 days after. But we have a lot. We have a lot of opportunities available right now.
Yeah,
it's
definitely no shortage of opportunity. That's kind of the message I wanted to get out, and that's good. Why don't well?
And may I add one more thing there, Paul? And shortage of opportunities. And when this started, we were building trusses, and we bought engineer wood, and we designed it, sold it. Then due to the lumber, due to the labor shortage, and due to the industry's demand, we ended up manufacturing wall panel. That is on a house, a wall panel package is way more in terms of values, about 4 or 5 times more the value of actually trusses. So there is another organic growth that we are dealing with, that we set up a factory in Nanaimo to deal with it, and in Ontario stuff there. So that was the other opportunity that it wasn't even there at the first day when we started to buy truss plant. And that is on its own is bigger than the truss business, the wall panel and stuff that we have, you know.
Yeah, exactly. I mean, I can answer most of the questions I'm going to ask, but I'm still gonna do my best here. So why don't we do that? Because that was one of the things I wanted to make sure everybody understood as well. So this is not just, Atlas is not just a truss manufacturer. Atlas is a wood product or a construction component manufacturer. So you know, the lead product is trusses, clearly, but the wall panels that you mentioned, the engineered wood products, the floor trusses, things like this, you've gone from basically how much is a sort of a traditional truss package cost for, say, a single family home? What would you say is an average?
Okay, if we take this, the old, like the normal lumber price days and stuff, so you look at average about anywhere from $7,000 to $10,000.
Okay, so $7,000 to $10,000 per home on a sort of with normal lumber prices, which we haven't seen normal. There's no such thing as normal anymore. Yeah, I agree.
Yeah, the one word normal disappeared from dictionary from now.
That's right. Yeah.
Then we added the floor to it that they almost increased it by 70%. But you add the wall panel to it, it could go multiply 5 times, or sometimes even it will multiply by 8 or 9 times, depending on how many walls, interior, exterior. So that's a whole different revenue.
So exactly. So the concept here is you've gone from roughly a $10,000 sale of trusses to as much as $60,000, $70,000 on an average home. So, you know, you've definitely broadened the sort of the SKU numbers. And so, yeah, you've added significantly to the wallet share when you're going in to sell to a customer. So the organic growth isn't just selling more trusses. We're selling all sorts of other products, correct?
Yeah, you're selling all sorts of other products, and that's why. But I keep mentioning it, like, you know, as you do every day, there is something new comes up, and a new opportunity and a new knowledge, and that's what's happening to our industry or our company. And one of them is that the advantage we have being a publicly trading company. Because as a private owner, you're going to have so much money you set aside for your retirement and different expenses. So it's not just business. Ours, we all work for this privately company, and we absolutely be geared into making profit. And that's in our DNA. Me, Melissa, Gurmeet, like, we don't know how any other way to be. And all that profit goes back into the future growth, automation, organic growth, new opportunities, everything. Like, some is a treasure chest, the rest will go back into the company, into growing it, whether it's M&A or future growth and stuff. But it's not about borrowing money anymore or diluting the shares. But you try to make as much money as you can. So you can walk in there with the cash money. Sometimes it's good.
Why don't we stay down sort of, you mentioned a couple of things, but now that you're a public company, how many acquisitions has the company made? Since
there are 6 of us right now. Okay. There's 6 of us. Yeah.
6 locations, right? So clearly you're much bigger than you were when it was just one facility. Give me a sense of the efficiencies that you have now that you've got, you know, broader sort of platform and a number of more companies. You've obviously got buying power, but there's other efficiencies now that you get as a sort of bigger business.
Well, the efficiency, yes, you have the buying power, and you have the cross-country knowledge you share, and then you contribute to each other from each different operations knowledge. The other thing we do with trust is is a very, very design-oriented manufacturing process. Like, when we get a set of plan, we design the house, we design the trusses, everything. And right now, it's given us the opportunity to have a design team that we share the resources across the country. So if at one moment, wintertime, there is somewhere in Ottawa or London that the designers are not busy, we use them for BC, and vice versa. So we have learned to be efficient on that. We have learned a lot about being efficient about our accounting processes and our bookkeeping processes and the whole operation. And it's huge, the efficiency we had. And of course, the biggest one is the size we are and the buying power we have. Like, now, when you knock on a supplier's door, they do actually answer the call, some of them, you know. So it's kind of good too.
Yeah, no, and clearly now that you've got sort of the base already taken care of, every acquisition you make from here on in, there's a little bit more scale, a little more leverage because of the efficiencies. That's great. Let's talk about last quarter. Q2, you just announced quarterly numbers. Revenues were up 82%, profit up 650%, operating income, I see 781%. Either you or Melissa, what happened? What happened in Q2 to generate these kind of numbers?
So Melissa, Melissa will explain the numbers, and she's the CFO, interim CFO of the company, and that's her. She will explain it. All I can explain to you really sometimes, like, yes, the lumber went up, so that increased our revenue a bit there, because it wasn't all due to the lumber increase. It was it was a combination of lumber, the housing starts went up, and our efficiency went up really, really much higher through that. We were able to get the order and manufacture it the most efficient way, because since I took over, my biggest emphasis was on making the cuts, not spending money, and then handling the process of manufacturing our product the most efficient way we can, because of the bottom line is the most important part. And the part is really I wanted to speak to is the most amazing for me. These times have not been the usual time. So it's not just, oh, great, the lumber went up and we got busy, so we do business. Every day, every hour, we had a different challenge we had to deal with in our operation. Whether it was labor shortage, lumber shortage, engineer wood shortage, or the price will go up overnight, and everything we had to deal with every day. And honestly, this is probably, you hear it only once and stuff, that I was so excited about the result, and especially the bottom line, that it was over 600% improvement, because that is where the real money is. And I can't believe it. And I don't know how Gurmeet and her team did it. The operation with her did it like this. They are old-fashioned trust operators, and I just can't believe it. Like, so imagine you're going to fishing, and every day there's a crazy storm, perfect storm at you. And that's all we were doing. We were fishing in a storm every day. And he hasn't finished yet. Now we got the new Delta variant coming and stuff. So that's the only thing I wanted to speak to that. And I always sit down and I was telling even to the board and Gurmeet, I said, I wonder what would happen if there was just a normal day, that we just wake up and go to work and go home, rather than dealing with one emergency. Like we became firemen, you put out fire every day. And that's the part I just can't believe how the team produced what they produce on the profit line, because that's the part I'm really proud of from them. I just wanted to bring that up, and Melissa can explain to you all the percentages, all you want to know from me.
Well, why don't we start with how do you, like, lumber was something that everybody's been talking about probably more than ever in history, just the volatility in lumber prices. Melissa, how did you guys handle, or explain how, you know, you guys managed around this massive volatility in lumber prices?
Day by day, minute by minute, as Hadi mentioned. So one of the things that we were fortunate to have is a vendor managed inventory system on our lumber, with a supplier that supplies us across Canada. It gave us insight. It gave us, so at the onset of the prices increasing, it gave us time to adjust our prices. The lumber that we had in the yard was already at lower prices at that time. Obviously on the downswing now, you know, you're juggling customers and expectations, and you know, you've had higher price lumber. But when we say we have higher price lumber in our yard, we're talking a few weeks. The main benefit we had is we never ran into lumber shortages through all this. So we could take advantage of all those housing starts that were going up and take advantage as quickly as possible, because we had this continuous supply. But through this, it's been a month to month work with Gurmeet and making sure our pricing is in line with what our costs are, especially as engineered wood products and plates joined the pricing fold, and material shortages came through.
And let's be clear, like, lumber is just one product that we deal with, but there's been supply issues and pricing issues with, like you mentioned, engineered wood products and plates and basically everything that's needed to build a house right now. So it's an ongoing issue, and it wasn't easy. One thing I'd note as well, maybe you can comment this, is that, you know, our competitors have been dealing with the same issues, and the smaller operators, my understanding was they just couldn't get some of the material at any cost. No. Which meant they were losing customers, and that's, you know, arguably how some of the other companies like Atlas were able to gain market share. Is that correct? Yeah,
correct. So either they stocked up on a ton of material that they've now paid a ton of money for over and above what we're at now, or they haven't been able to get anything. We've fought tooth and nail to get every material we could in our yard that we needed, and it served us well through this period, but not without its challenges.
And the other thing, sorry to jump in there, Paula, sorry, Melissa. The other thing was, you asked me earlier on question, and one more thing we did, especially in Ontario, even we tried it in Abbotsford and Nanaimo, there was at times when we got a little bit of an empty calendar, we would help each other manufacture trusses for each other and ship it to each other. Mm-hmm. So we started supporting each other like that too there. So it wasn't just brain collaboration, it was manufacturing collaboration with it too there.
Mm-hmm. So one of the things that I was impressed with, and hopefully other investors were as well, was you managed to grow the revenues quite considerably, but you've maintained sort of steady expense line. Maybe let us give us a sense of color. Were we able to sort of save money or cut costs, and you know, I guess where are you spending money? You know, how did you manage to keep expenses in line as much as you did?
So really, there was a lot of stuff that we had in the prior years where we were getting up and running. Costs around websites and marketing development and communications. So this year we've kind of fine-tuned, well, a couple of those projects got completed, and then we've really condensed and consolidated and made our teams as efficient as possible. So when we go into the operations and we're looking at our G&A and our overhead and our cost of sales, are we getting the best bang for our buck? Do we have equipment that we can move around to utilize? Do we have everything like that? When it comes to the G&A though, we really fine-tuned our labor expenses for the most part, and then our outsourcing. So what could we bring inside of our company and skill set we had to utilize that instead of outsourcing the same skill set? We just found it internally and made that more efficient.
Where do you think there's more room for improvement, if anything, if anywhere?
I think at this coming stage, there is a little bit of expansion that's going to have to happen for the next step of the growth. When it comes though to more savings, there's definitely still some I can pull out of, and you know, whatever, blood out of a stone, so to speak, I guess. But we have condensed quite significantly over the past year. I feel like there is some areas for efficiency, for example, within my finance team, coming through with a more consolidated financial reporting system, an ERP system, would make things more efficient, faster, and quicker data out to the entire operation, including.
Right. Okay, fantastic. Have we lost Hadi, or is he eating a sandwich or something? There he is. Good.
No, I just sometimes I can't control my hands, so I go on mute so I don't have to make too much noise. That's all. I get usually told off for my behavior on that.
Oh, you're doing fine so far. No worries.
Thank you.
Okay, so you know, I fielded a number of questions today. One of the things to make sure everybody's aware of, like the first half of the year is traditionally sort of the slower half. Is that not correct? Okay.
Yeah, the first half. Yeah. Sorry.
Yeah. So one of the things that I got today, questions were really around like how repeatable is this? Like certainly lumber prices are down significantly. So we're not going to get the benefit, sort of the top line benefit of, you know, extremely high lumber prices. But what does sort of this next 6 months look like in terms of, you can't give numbers or anything, but just general feel for the businesses. Are housing starts still relatively good? Are you seeing delayed projects coming back? Are you seeing a slowdown? Give me a general sense of the trend that you're seeing as far as business.
Right now, this quarter, the third quarter, is very, very strong. Yeah, and the fourth quarter traditionally is strong. Basically, all we can go off but the forward work we have on the books, because usually you book them and you ship them a few months after. Like we have a very, very strong, year coming ahead, and the next 6 months ahead of us there. And really, the only thing I can say with the repeatable one there is one thing we have learned a lot, and you heard it from Melissa, and when I heard Anger meet work together on cost effectiveness and cost saving and stuff. That's one thing we know we know really well. We know how to hunt for the business, and we know how to make it and make the money. Now, how is it exactly copy? I can't tell you 100%. Is it going to be better? Yes. Is it going to be a little bit lower? Maybe. But we can only see what it comes there. I wish I could share numbers or I could share everything I know and stuff there, but I can't. And nothing's ever guaranteed in life there. All I know in my experience being with working with Gurmeet and Melissa, God knows, last so many years, we have always consistent on doing what we do best. Mm-hmm. And if you keep an eye on efficiency and the bottom line, and you keep an eye, make sure you get your fair share in the marketplace without having to go buy it. You get your fair share in markets by being good competition and having an eye on the bottom line, because we are not predators. Yeah. And so that's the thing. Like, I know sometimes you hear this is too good to be true. It was like last quarter I was told this is too good to be true. So I don't want to be a victim about it. What is it going to take for people to actually stop believing we know what we're doing? All I know is we've been doing it for 35 years. So and then one day, God bless all the investors, they can actually wipe their eyes and say, yeah, maybe this is legit. Maybe they know what they're doing. Yeah. And it's whatever's inside your control too, Paul, right? Mm-hmm. We can't control the government, we can't control the economy, we can't control the interest rate, nothing. We manage what is within our control. And nowadays with the pandemic, sometimes we feel like we have no control over anything, but still we're trying to manage it what you know best and your experience. Yeah. Mm-hmm. And he said, this is the down to earth, non-sexy business that you just manufacture roof trusses and floors and wall panels. It's the most sophisticated thing we do for construction. And construction is one of the biggest thing in North America right now. And we are one of the biggest players out there too. So, and we just keep going. Everybody needs a home. Everybody needs a home.
You know what? And this is the other thing that I get a lot of, is that everybody's so used to seeing the sort of the headline news about Vancouver and Toronto and the housing prices are crazy in this housing bubble. But there's technically there's a housing shortage. There's a shortage, a supply of homes across North America. And it's all a function of where people are moving and how they're changing their lifestyles. You know, I know a number of people that are moving to the island because it's cheaper. They want a house. They don't want to live in a condo in Vancouver. So they're moving to areas where they can actually buy a house. It's interesting that doesn't get properly reflected in some of these housing numbers. So there literally is a housing shortage. So there's going to be continued demand to meet that shortage. It's just a function of where is that going to be, correct?
Yeah, it's correct, Paul. Plus, you see, when you get those news from the world evolves in big major cities, Vancouver, Toronto, that's everything's concrete. It's a concrete jungle. Everything's a concrete building. Like 2 years ago, no, sorry, not 2 years ago, 4 years ago, the biggest growth in a municipality was in Milton, in Ontario. Nobody ever spoke about that. And that was Plain Jane, Madame Homes, and a couple of other builders. They just built a stick frame townhouses, and they couldn't even sell them fast enough. Now, Toronto, Vancouver, yes, is the major urban city and high rises, but there are thousands of municipalities around here that people move in and working and raising their children. But whether it's the reporters or the bankers or whatever, the bulk of the business, because of the high-rise business, that we don't even do 1 penny in high-rise business, concrete. That's Vancouver and Toronto, and maybe Ottawa, Montreal. But the rest of Canada is stick frame wood construction. And that's what people need. Plus, the other thing is, because of pandemic, we had not allowed immigration into the country. We used to have over 300,000 people come to this country. And then as an immigrant, your first dream is to buy your home. And we haven't had that. We haven't opened the borders yet. Yeah. And that is going to come. And that's why one of the shortage of labor we have is because of that. So it's right, honestly, like 30 years ago, I used to worry about, like Gurmeet knows 22 years ago, I always used to worry about the next payroll in next month or 6 months or whatever, thinking the whole world's going to end because there is no construction, but it's never stopped.
Yeah.
It's never stopped. But with the news and the thing there is, you got to look at, when you look at the permits and the new start, not the high rises. It's the new construction in the suburbs. That is absolutely, if they had enough laborers and framing crews, they were going twice as faster. Yeah. And the last thing there is there about our construction industry, even this been the most uncomfortable thing for me since we gone public, to announce numbers like this and to talk like in talk shows, like to conference calls like this, because we are very, very famous in all of the people in construction industry. We go under the radar and we keep quiet. We don't like to brag. We don't like to make too much noises, and we don't like to tell people how much money we make. And that's one of the things that you don't hear much from the news out there. And most construction big contractors or whatever, they are billionaires, but they don't say anything.
Right. Yeah. Why don't you brought this up a couple of times, but I want to really make sure everybody understands the challenges a company like this faces. You've mentioned labor, a number of times. There's obviously material prices. But let's talk about all the challenges you face on a sort of daily, weekly, monthly basis.
Yeah. So Melissa explained one of it very, very, made it sound so simple. Like the one of them there is there, like for Melissa and Gurmeet, when they get the financial report, like they work with that every day, nonstop. That they look at the report and they look at how can we increase the margins? How can we reduce the cost here? How could we do it? And they manage everything. They manage all the numbers. Now, the challenge comes, you wake up in the morning and you're praying to God, okay, how many percent the lumber is going to go up? That's number one challenge. Number two is, when are we going to get delivered? The material is going to get delivered. And they, like, just because you give them a purchase order and they give you a promise, it doesn't mean they're going to deliver it, because they rely on a mail and whoever gets it first, right? And then, so those are the challenges. So you wake up, you try to manage the margin stuff, and meanwhile, you try to do the, have your raw material there. Then the other challenge is, you phone an ops manager on a Monday morning or a Tuesday or a Monday morning or a Friday, and ask them how many people didn't show up to work today. Never mind the shortage of workers we have, that we can have. How many people didn't show up? Because it's the worst time, like you're scared to go to work because, 20 people missing today, or 15, because we want a long weekend, the weather's warm. So those are all the challenges we have. We have to deal with on a daily basis, and to do what we do next. And then it doesn't just simply goes on, then it goes on to the contractors. When they say, hey, I need my trusses on Monday the 15th, they need to have a crew to do it. And not all the time they keep their schedule. And then they juggle it. So it's just like a fireman job. You just put enough fires, all that forest fires everywhere.
Yeah, gotcha.
No, that said, sorry, that said,
Okay.
this is, I'm not painting a dark picture. That said, we did what we did with those numbers.
Mm. Yeah, and quite frankly, I mean, all your competitors are dealing with the exact same issues you are.
Same thing, yeah.
Hopefully, you're just dealing. You're doing it a little bit better than everybody else, right? You don't have to, like a horse race. It's you just have to win by nose. You still win, right? So
just that one, yeah.
Exactly. Okay, so listen. Sort of over the course of the last year or two, you've done something different. Most of the growth. Most of the sort of the M&A growth has really been literally you've gone out and bought other businesses and then trying to integrate them. But you did something different in, I think it was Abbotsford with Novum. Why don't you explain what you did with Novum? Novum is like a bit of a hybrid. It's not quite an acquisition, but it's not purely organic growth. Describe Novum.
Yeah. So with Novum, this was a very small company, and the owner had decided a few years ago he wanted to retire. So they were just operating the company as it was, and they were not growing, they were not going backward. It was just, it was just a very small company, very, very minimal automation. And then we took that over for a very reasonable price, very, very, it worked good for the owner and it worked good for us. And then we still not finished with Novum. We added, as we were able to, we added 50% automation to it. Then Gurmeet, or VP of operation, she started running that operation as an hybrid, because at that size, you don't really, you don't need that bigger one operation managers and everything there. And that's what we're trying to do, hybrid roles for being cost effective for the management. And then we started slowly turning that company that is actually becoming a very, very big source of organic growth for us. And we've been waiting for a window of a little bit of slowdown so we can finish the rest of the automation, because we have the machinery we already bought in Christmas time. Once we finish that automation there, then there is another major growth will happen there. Because Novum in Lower Mainland, in Abbotsford, by Vancouver, has one of the biggest potential for growth for us. And then we are working on that. And what we have learned, we're just doing it slowly and surely there right now. And we have turned it around and we make money there and we are busy there. We are really busy.
So what, I'll try to explain it a little bit as well. What we've really done is we've grown sort of, or we've established market penetration in a market that we weren't in before, but we were very close to. And we didn't do it through a purely an acquisition, and it wasn't purely a startup. So it was a combination of the two, where we were able to get a small footprint, automate, establish a presence, and now we can automate even more. So it's almost like we bought an acquisition, or we bought a premise for very minimal cost for what the opportunity looks like it's going to turn into, correct?
And it's correct. And then the other things we have learned about this type of M&A is we bought it for a very, very minimal cost. And we did not have to set up a huge cost of management infrastructure there. Mm-hmm. We already using the existing management we have in other locations to run that company. Mm-hmm. So it's really like a satellite plan running on its own without having the boss, the assistants, everything in there. And it's really given us that, we learned that opportunity about it. And being in Abbotsford, it's not a small town. Abbotsford's huge growth there and that Fraser Valley there. And we can reach a lot of, go a long way from that location we have right now. But the biggest eye-opener for me was we were able to manage the company with Gurmeet and other people and the designers without having to bring all of the overhead. Because one of the areas is difficult. When you grow in your business with revenue and happening, and the growth is happening, lots of times you got to invest upfront in manpower, in machinery, everything. We did the growth and we cut back on our expenses. Like that is the most important point there is that we had no one and we didn't invest upfront for management and positions and secretaries, everything. We actually kept it just a manufacturing, lean manufacturing, and we used the existing management from the other areas. And that is the part I'm really excited about. We grew the revenue way huge percentage, by 82%, but we cut back on our costs.
And I want to add too that you were so lean that you were actually on the shop floor a number of times to actually build trusses to make sure that that the demand was being met. The other thing I want to mention about Novum, and this is what I was hoping we get to, is that we technically have the ability to do this in other markets as well. So we don't necessarily have to enter a market by acquiring a company. We can take this sort of hybrid model and go into other markets, can we not?
Absolutely.
Yeah.
You see, and that's why that's absolutely is giving us another option. It's giving us another option that it's not always having to buy other companies. Because just sometimes buying other companies, the integration challenges are huge too, right?
Yeah, exactly. Okay, cool. So one thing we haven't really touched on too much, but okay, we mentioned trusses, we mentioned some of the other products, but give us a sense of how things are going as far as wall panels and maybe, engineered wood products, or the non-truss side of the business. How is that going, and how are we rolling out with some of the different markets we're going into?
Well, the engineered wood product is always been a big part of our organic growth. And right now we have had challenges with the costing and delivery, and it's getting a little bit better, but still we have those challenges we deal with, but still is a big part of our organic growth. And the wall panel is a major part of organic growth. And the toughest decision for us was to slow it down. Let's learn what we do. And it's the old adage, let's walk before we run. Because sometimes when like we are so efficient at building trusses and shipping it, we can ship millions of dollars worth of trusses, say in the Nanaimo facility or Ontario, without a glitch. So you can't just take that to the wall panel. And that's, I noticed the mistake I was making with my expectation of that. You need to start walking with it before you run, and we are learning really good. We are learning how to manufacture it, how to build a good quality product with a good bottom line. And then the growth on that is huge. It's just right now, I said before, is we're working on the foundation. and just walk in before we run. So the next few years is going to be huge future for us in the wall panel. And we have more machineries to set up more. That's the part about all those machines we bought last year. We have them in storage, and we still haven't used more than half of them yet.
Yeah. Okay.
So we still have more.
Yeah. So to be clear, like there's still some efficiency improvements because of the automation from the machines that we've already paid for that are basically sitting ready to get installed.
Absolutely. It's one of those things that you make a decision when you're going to do it. Right now, we're busy. We are in a big third quarter, fourth quarter, or busy season.
Yeah.
I'm on your first and second was good, but these 2 quarters are the busier season.
Yeah.
So we concentrate on that. And then when we have a few breather time in winter time, in January, couple of weeks, we start putting more automation like we did last year.
Exactly. You don't change the tires of a Ferrari while you're driving at 100 miles an hour. You got to park the car first, right?
Yeah. That Ferrari, me and you're going to buy one. Yeah,
that's right. One day. That's right. I want to remind everybody that's listening, of course, if you've got any questions for Hadi or Melissa, please feel free to use the chat function, and we'll do our best to make sure those questions are answered. Why don't we talk a little bit about just the wall panels? What is a wall panel? What's a wall panel?
The wall panel is basically, if you visualize a house, you have the roof and you have the floor, and everything between the roof and the floor is the walls, right? And so we call it a wall panel. The reason we call it a wall panel, because you either old traditional way you frame them on the side and you put them all together piece by piece, or a wall panel, we build panels by panel. We engineer them in a manufacturing shop, we design them, we engineer them, and we ship them by panels like a Lego, and then they put the pieces together. That's a wall panel. And then you have exterior walls and interior walls. That's what the wall panel is. Yeah.
Perfect. Okay, so we mentioned M&A. We've mentioned a whole bunch of things. Why don't we talk a little bit about the balance sheet? Clearly, we're busy. Cash is coming in. Some cash is going out. You're buying inventory. Give us a lay of the land, maybe Melissa. I think we've got 1.6 million in cash as of the reported quarter. What's our AR look like? Maybe give us some color on AR. Just give us a general sense of the balance sheet.
Yeah, our balance sheet has been continuously improving over this year. Yes, we're happy with our cash right now. There's definitely some growth to come in, but as we're still kind of on the upswing on the revenue side, the cash is still somewhat going out the door to make sure that we have materials, labor, equipment, everything that we need to continue supplying an upswing. And as probably most people are aware, AR, the cash doesn't come in the moment the product goes out the door all the time. So that's where, yes, it looks like if you compare June to December, as our statements have to, it looks like we've had a huge jump in AR, and maybe there's collections there that need to be done. Rest assured, finger on the pulse every week, every moment, and go to Gurmeet and, hey, you know what, we need some more in, or this is becoming an issue, but we haven't had those problems. And as much as I was expecting some through COVID, not to anywhere to the extent, especially with all the industry thriving. As a matter of fact, when I compared June of this year to June of last year, AR compared to sales is within 1%. So we're pretty consistent on that level. The other jump you see is obviously inventory. Our material prices have skyrocketed. Not to mention, we're comparing prior periods that either, if I'm comparing to last June, we're just coming out of the onset of the pandemic and the first shutdowns. And as of December, that's, you're getting Christmas, New Year's, and that's our quietest time where we don't have finished goods as much in the yards. And this June, we had finished goods across our locations because we're still going into our Q3, which is typically our highest quarter of the year. Working through the balance sheet there, not too many surprises. Most of it just stems down to our increased sales, our increased costs. And through that, we're still working at, debt levels are coming down through our monthly payments. As we look forward to the future and options into debt, it's really a case-by-case basis. Obviously, right now, the interest rates are kind of amazing. So never shut the door on that when it's the benefit is going to outweigh the cost. But for now, status quo is where we're headed.
Perfect. And one thing to note as well is that last year, I can't remember the timing, but last year you had a new banking facility with, I think it was TD. So you guys are, you have much more flexibility in terms of capital and things like that. Even to consider going forward with an M&A opportunity, your balance sheet's much stronger than it was this time last year.
Very much, and that relationship has been amazing. The communication back and forth, the opportunities that have been presented, that we still need to take advantage to the full extent at this point, can bring more efficiencies into the future here.
Fantastic. Hadi, maybe just a little bit more color on just, this is another question I always get, but what does the M&A pipeline look like? And, you can't talk about specifics, but there really is no shortage of opportunities if we really want to shake the tree hard. The question is one of what the best approach going forward is, whether you do the hybrid model that we talked about with Novum, whether you do a full-on M&A, or whether it's just, put the pedal down on the organic growth. It's still, there's still a lot of organic growth available. How do you telegraph to the market sort of how you want to approach this?
You do all of above. You keep concentrating on organic growth, and you look at the hybrid model, and then you look at the buying up existing business if they fit. The organic model and producing organic has its own challenges, but it's controllable because of you just adding the labor and the sales and revenue to it. The hybrid model is got its own challenges, but it's more doable because of the management team we have and the machineries we have and stuff. The buying the other companies, it provides these challenges, especially during the COVID time. But there are lots of good companies around that we can go, that we are in talks. I've been in talks with them for a long time. And then we are working through all the due diligence and stuff with them. But before we do anything, there is no justice done to the shareholders by going and doing a private placement and another 40 or 43 cents. Just your currency is not there yet. So that's number one. And the other thing is, there is two to tango. What does the buyer want? It's not just something like, oh, there's a buffet dinner, I'm going to pick up a piece here, piece here. You have to be careful what you're picking up there, right? So there is a due diligence in down there. What price? Is it the price has to be fair for the seller and has to be fair to us and the shareholder? Then the most important part there is the automation they have and the machinery and the integration, that there is a value to put on that. And so those are above, like I'm working those day in, day out. And we don't stop working on those things. And now we accelerated a bit more right now, because the first 6 months of me being in this position, we just wanted to build the foundation for the business and prove to the market we actually know what we're doing and we know how to make money. Then now we looking more and more to the future of how to expand and everything. But it's like anything, I'm a true believer. I'm very conservative in that area, and you learn to walk before you run. And it just always, and we look at this business like our own business. It's a publicly trading company. It's amazing. We have so many partners and owners in this business. And yes, we are shareholders, we are significant shareholders, but still we respect everybody else and we work for this company as it was ours. Like we take care of the money and everything in this company more than we take care of our own money. And we're going to spend it wisely. And with the board they have the same, and you are one of them, we have the same approach. So we are not just going to go and buy a company that they have a $20 million, $30 million revenue company to just look good because we have high revenue. Because how are you going to integrate it, how are you going to add value to it, and how are you going to make money? That's what we want to do. And that's what we try to do with Novum. We want to emulate that. Now, that said, the pipeline is huge. Honestly, it's huge. And sooner or later, we got to look at it. We got to look at it. But first, we like to see the share around 75, 80. It should be around that area anyway, or $1. Then we can start talking seriously.
That's right. That's right. Attaboy. Okay, we do have one question we'll take here. It's actually two questions, but in your opinion, what's causing the labor shortage I guess in generally in the construction industry? And then, how much of this do you think is related to COVID?
Okay, we always had the labor shortage. Like this is something we were talking about this 5 years before COVID started, that North America, we walk construction, we're going towards the labor shortage. So that is what's happening already. So what COVID did was they stopped the immigration coming to the country. And then for right or wrong, the government started handing out money. And you have the money coming up from the government, and that will cut down on your labor shortage on the ground level. Like when you go, say, $1 or $2 above minimum wages, and that's where the government's handing out money, and the weather is so good, and in British Columbia, Ontario, we have lots of lovely beaches and lakes around. So why would you want to go to work and chug lumber around and build trusses? And that was one of them. So hopefully, I'm not going to get political about this. Hopefully the Liberals, once the election's done, they're not going to buy election or somebody else comes in power, and they're going to do whatever they do. And then now we learn, forget what the government's doing. We just hopefully we buy some robotic machineries can replace that. And that's what I'm working on right. But there is a combination of causes that UNSERV didn't help us either. For the sake of not creating a bunch of enemies in the country. Yeah, that one wasn't, like, it's great for some industries, and certain industries, it just started handing out checks. We just handing out money. That's it.
Yeah.
The biggest part is still, I believe, is the immigration and stuff there. And plus, and the last thing is, when you look at the kids in high schools and everything, that they have iPhone and smartphones and everything there, and with Amazon, Microsoft, that they hire in tens of thousands of people, it's pretty difficult to ask them to come on board, put lumber together. And thank God, as a publicly traded company, we do have one advantage. We have the cash, we have the power and the facility that we can go become a fully automated facility. And that's the part I get really excited about. Give you a little bit out of the cat. That's the part I'm really excited about. Yeah. And we have the power to do it. That's one advantage of being public. And the size we are, we can do that kind of thing.
Yeah, no, and I think a number of people here know that I used to work in construction, and the issues you're talking about in terms of shortages, and I mean, we were seeing it 30 years ago when I was in the industry. They're always trying to recruit more young people to get into the trades, and I mean, it's hard work, right? And it takes a certain type of person to be able to do that. But I'm excited as you are, and we talked a lot about this in the past. Some of the technology and some of the new way of doing things and putting product together, and even the automation is one component, but there's so much other technology that can be brought to this industry that I think there's a lot of opportunities I think for a company like Atlas. Why don't we'll wrap up here, and always like to sort of get a sense, but where do you see Atlas in 5 years from now? What's Atlas going to look like 5 years from today?
In 5 years from today, in terms of revenue,
generally, whether it's revenue or just
general.
Clearly, I expect that you're going to say it's going to be bigger in 5 years, but where is it? Is it North America wide? Is it are we selling all sorts of different products? Is it all robotics? What can you tell us?
In 5 years, there will be a team of companies that they grow. I don't know the exact number. It will be a huge team of companies across North America, from across Canada and US, and then we'll be manufacturing all the product we do, and any other new products comes along there, and it will be. They will be fully most automated factories that anybody would be proud of to be a part of. That fully operated, that you will not hear me say my labor challenges anymore, and the quality challenges and delivery challenges. That is the 5 years we're going to be there, and we'll be across North America, not just Canada.
That's fantastic. Okay, so apart from that, I always like to give you guys an opportunity to just give a parting message, like anything. What do you want to make sure that those that are listening today really walk away from? What message you want to walk away with today?
Okay, the biggest message I just wanted to tell them was to tell everybody on the call, and I assume, and most probably most of the people on this call are shareholders, and I'm hoping they'll be future shareholders. And I just want to say, appreciate your patience. Thank you for being with us, and including you, Paul. Thank you for being with us for the last 3.5 years, because our share and everything, for whatever reason, it was never performed as the way it did and never gave a return to the investors. And I just wanted to say thank you for the patience. Thank you for being part of the journey. Like, I'm honored to have partners everywhere in the country and around the world to be partners with us in this company and this stream. And thank you for your patience. And really, at the end of it too, I promise you, we worked really, really hard. And I have never seen a group of people the last 6 months work as hard as they have done, and they care. And they still do more. They care more. And I'm absolutely proud of them, and we won't let you down. We will make sure your investment is worth it's supposed to be. I can't control the market, but one day it will come around. And I just thank you for your patience, and we love you all for being part of the journey with us. It means a lot to us. That truly does mean.
No, and Hadi, I've come to know you over the years, but more closely over the last 6 or 7 months since you took the helm here. I want to personally congratulate you, Melissa, Gurmeet, and the team. I think you guys have done a spectacular job of running this business. I think the way it needs to be run. I'm excited about what the future looks like. I'm very sort of happy to be a part of it. I want to wish you guys continued success. I think this has been a great ride so far. If somebody wants more information about Atlas, remind us what's the website address for Atlas?
It's www.atlasengineerproductslimited. Is it .ca or .com, Mac, right?
That's both.
Both, yeah. Oh, we got both of them, yeah. Did I say it right, Mac? Yeah.
Yes, at www.atlasengineeredproducts.com is the
There you
name.
go. A bit of a mouthful, but we got it out. That's
And
fantastic.
everybody knows it, Paul. We are world famous, man. Everybody knows.
They can always send me an email. I'll make sure it's directed at the right spot. This has been fantastic. I always have a lot of fun when I talk to Hadi and the team. Again, I think they've done a great job. Hopefully everybody agrees. Just a reminder, again, I am a director and a shareholder of the company, but still I can beat my chest a little bit. Happy that we've seen what we had. Again, I want to thank everybody for joining us today. Hadi, Melissa, Gurmeet. I know Gurmeet was quiet, but I know she's listening. I want to thank you guys all for being with us. I look forward to catching up with you guys again soon, and look forward to the next couple quarters in the future for what you guys have in store for Atlas and their shareholders.
Thank you, everybody. Yeah. Hopefully we will surprise you next quarter.
There you go.
Thank you.
God bless everyone. Thank you. Bye-bye.
Thank you. Bye now.